Welcome to this explainer, where we're going to break down Zoom's Q1 fiscal year 2027 earnings. Now, if you think Zoom is still just that app you used for video calls a few years ago, well, you might want to seriously update your perspective. Today, we're exploring their massive pivot into a fully unified AI-powered ecosystem, and we'll see exactly how the numbers back up this incredible strategic transformation. Okay, let's kick things off with a massive number right out of the gate, 184%. That represents the year-over-year growth in Zoom AI Companion paid monthly active users. Just think about the sheer scale of that adoption for a second. I mean, in the enterprise software world, seeing a user base nearly triple year over year for a totally new capability, that's a huge signal. It tells us that customers aren't just kicking the tires on Zoom's AI, they're actively relying on it month after month. But, engagement is really just one piece of the puzzle. This naturally leads us to ask the billion-dollar question. How is Zoom actually translating this rapid AI adoption into undeniable financial success and cash flow in 2026? Because a great product is one thing, but a great business model is a whole other ballgame. To understand their financial success, we've got to look at the structural shift in what they actually sell.
Section 1. Elevating Workplace with AI.
This right here brilliantly illustrates the foundation of their strategy. Zoom Workplace is definitely no longer just a standalone video app. It's truly transformed into a comprehensive communications ecosystem designed to be that single pane of glass for enterprise workers. Now, what's really fascinating is how the Zoom AI Companion acts as the engine for this entire ecosystem. It's not some clunky, bolted-on feature. It's this foundational layer seamlessly integrating intelligence across literally all their products. Whether you're drafting a chat, summarizing a meeting, or analyzing a call, the AI Companion is driving that massive user engagement we just talked about, keeping users completely glued to the Zoom platform. Moving beyond just video, let's look at Zoom Phone. Its annual recurring revenue, or ARR, is growing in the mid-teens year over year. As businesses look to consolidate their messy tech stacks, Zoom is stepping in to replace legacy PBX. Those clunky, traditional hardware phone systems, and they're scaling this adoption rapidly across global enterprises. So the crucial point here is that this combined ecosystem strategy is actively winning huge enterprise deals. 15 of Zoom's top 20 Q1 wins featured either workplace or phone. That proves for sure that the bundle is working. Plus, their My Notes feature just crossed 1.5 million licensed monthly active users. When you combine this with the mid-teens growth in Zoom Phone, it paints a picture of a deeply embedded, highly sticky platform. But hey, an ecosystem is really only as strong as its connections and its ability to continuously evolve. Section 2. Driving Growth and Innovation. Zoom totally recognizes they don't operate in a vacuum. They're proving they play remarkably well with others by deeply integrating with essential, everyday enterprise tools like HubSpot for sales and marketing and Figma for design. This ensures their workplace platform sits right at the center of where work actually happens, no matter what department you're in. But they aren't just relying on external integrations, right? They're continuing to push boundaries internally as well. Zoom's rolling out highly specialized tools like the custom AI Companion and the ZVED, or Zoom Virtual Agent Receptionist for Zoom Phone. These aren't just generic features. These are targeted innovations designed to capture more enterprise value and solve very specific workflow bottlenecks for their clients. And guess what? The market is responding enthusiastically. 9 out of their top 10 Zoom Customer Experience, or ZCX, deals now involve paid AI. By weaving AI into their contact center offerings, they're driving high double-digit year-over-year growth for ZCX annual recurring revenue. Section 3. Q1 Financial Highlights. Okay, we've talked a lot about the product and the ecosystem, so let's get into the hard financial proof to see how these innovations actually hit the bottom line. Zoom generated a massive $522 million in operating cash flow in Q1 alone. That is highly significant cash generation, especially given their highly efficient 42.1% operating cash flow margin. It shows they aren't just buying growth, they're generating solid cash reserves while they scale. We're also seeing a really clear jump in profitability here. Operating margins, which is basically how much profit they make on every dollar of sales, expanded significantly. GAAP margins jumped by 450 basis points to 25.1%, and non-GAAP grew to 41.1%. This kind of operational efficiency is exactly what investors look for in a maturing tech ecosystem. They're getting leaner and more profitable even as they innovate.
Naturally, all that operational efficiency translates directly into strong earnings per share. GAAP diluted EPS came in at $1.42, with non-GAAP diluted EPS coming in at a very healthy $1.55 for the quarter. This is really the ultimate reflection of their ability to turn AI user engagement into tangible shareholder value. Which brings us to their future pipeline, specifically remaining performance obligations, or RPO. Basically, think of this as their backlog of contracted revenue. With current RPO making up 61% of the total, the company has incredibly strong short-term revenue visibility. It proves the money isn't just a one-off, it's locked in and coming down the pipe. So the company is highly profitable, generating cash, and successfully shifting its identity. Where is Zoom taking all this momentum for the rest of fiscal year 2027?
Section 4. The road ahead. Now, right before we look at their exact projections, we just need to neutrally note Zoom's safe harbor statement. This is that standard corporate reminder that all outlooks are forward-looking and inherently subject to market risks, macroeconomic conditions, and other uncertainties that could cause actual results to differ. So, with that understood, Zoom is projecting a seriously strong year, with full fiscal year 2027 revenue guidance of up to $5.09 billion. Furthermore, they're projecting robust non-GAAP operating income of over $2.06 billion for the year. This signifies absolute confidence in their ability to continue monetizing this newly expanded platform. And speaking of confidence, how about $1 billion? In May, Zoom's board authorized a massive incremental $1 billion share repurchase program. And remember, that is adding to the $625 million they already had remaining under their previous authorization. That's over $1.6 billion in firepower dedicated entirely to buying back their own stock, showing exactly how management views the company's valuation and cash generation capabilities. So the big crucial point to leave you with today is this. Zoom aggressively buys back its own stock while simultaneously pushing powerful AI into every single corner of the workplace, from your phone to your contact center to your meeting notes. Just how dominant will Zoom's newly unified ecosystem become? They've got the cash, they've got the products, and they absolutely have the momentum. It's going to be fascinating to watch. Thank you so much for joining me for this explainer, and keep learning.